very much. As an executive of one of China's leading foreign banks with a continuing presence since 1865, it's a great privilege to be able to play an active role in what we see as the birth of the new world currency. Yeah, these are the key areas we wanted to focus on. To us, it's a bit like talking about a mobile phone. You can get right into the, we can talk about it fairly simply because we all know how to use a mobile phone, and the reality is to us, it's just like dealing with another currency. But when you delve below it, there's some more complex features and so on. So we won't necessarily get into all that detail unless you want to ask some questions afterwards. But clearly, for us, the main message we want you to get is that RMB is just another currency. We've got full functionality across everything, accounts, all the trade instruments, etc. So I'll quickly whip you through some of the timelines and exactly what's going on, just to give you a bit more background. So clearly, we see huge opportunities. I think this is fairly self-explanatory, so again, we probably don't need to go into too much detail on these slides, but despite the size of China, I think you find the numbers on the right there quite staggering. Really, the daily turnover of US dollar is just ginormous, and RMB is almost non-existent on that slide. So, to us, clearly the majority of external trade is carried out in other currencies, despite China having such a huge place in the global economy. So I guess the simple message around the internationalisation of the RMB is that it's allowing the local Chinese currency to be able to be used on a cross-border basis, as simple as that. So it's not fully convertible just yet, but certainly will be over time. And I think based on these statistics, you'll really see that the growth in use of RMB, I think, is the tsunami that we're all expecting. So we'll certainly see that shortly. So this is just a quick timeline. I'm not going to test you on this when we leave, so there's copies available of this if you really want the details in greater detail. But clearly you can see that the timeline's quite new. Like it really only kicked off in mid-2009. And it started off with a very small pilot scheme, as you can see on the slide. So it's really quite restricted to a certain number of cities. And then was opened up further to what we call these mainland designated enterprises. There were more names added, and it's expanded that as each of those dates show. So clearly, the next slide will show the growth in volumes, and it's quite impressive. But I think, as was briefly touched on, the key is, as at this point in time, we're still waiting on the blacklist to be published, which will basically abolish the MDE status. So MDE still is relevant until we get this blacklist, and we're expecting that shortly. Clearly that will be a bit of become something wrong, I suspect. So probably could be on the deal anyway. In terms of these numbers, again, I hope you can see those. They're a bit small for some of you up the back unless you've got a magnifying glass. But I guess the key here is to really show the growth between 2010 and 2011 is enormous. So it really has taken off with that timeline, and I think these numbers are very material. So you'll see, I think those percentages probably stand for themselves, but I think what really jumps out here to me is that Hong Kong dominates. This is the main site, and 81% of payments are actually run out of Hong Kong in RMB. But the adoption is broadening, and HSBC has been involved basically in, I think, all 5 continents and 52 countries in RMB. So the outlook to us is that these trends will continue. You can see the RMB deposits in Hong Kong have grown dramatically, 87% year on year, and RMB borrowings, whilst quite low at the moment, are starting to increase quite rapidly. And I think what you're seeing there at the very bottom is the currency's rent we expect to really jump up quite quickly. At the moment, going from the 21st to the 17th sounds pretty insignificant. Given China's presence around the world, that's clear that we expect that to change quite dramatically. So I guess the continued market growth is being driven by this ongoing deregulation. You saw those timelines that happened quite quickly, and I think as people get more familiar, as Hong Kong does with RMB, we'll see it really take off in many countries. Clearly, the expectation for appreciation drove a lot of the growth in Hong Kong. We aren't seeing that as much at the moment. We're seeing, obviously, less appreciation but more volatility as that trading range widens. But we're seeing an increased, I guess, pace of capital and other reforms as well. So, for example, bond offerings and financing in RMB, issuing bonds is just gone crazy, as you can see. The foreign direct investment and other flows suggest that if you've got assets, for example, in China, then you want to have your liabilities in the same currency, for example. So there's a really underlying fundamental rational reason for RMB to continue to grow. I think this one shows, we talk about onshore and offshore. So offshore RMB, this graph just very obviously diagrammatically shows month by month. You probably can't see, you can see it starts from a very low base and it's built up very quickly. So the blue line there is what we call time deposits or term deposits. It's the equivalent here in Australia. And obviously the on-demand savings accounts. And the red line is the RMB trade settlement. So you can see that that's been a very dramatic growth. And in fact, RMB deposits have reached 566 billion at the end of February in RMB. So that's just obviously staggering growth rate. But loans at 30 billion sound relatively small, but we certainly expect that to continue to grow. And these are based off the HKMA, the official stats. But obviously the RMB trade settlement, which is what we're mostly talking about today, has increased into the billions there at 360 odd billion, which is the equivalent of just under $60 billion US dollars in 2010 to 1.9 or 1,900 trillion, if you like, to 300 billion US in 2011. So you can see that's a massive growth rate. That's 6 times effectively in 12 months. So with Hong Kong handling a whole lot of that flow, it's important to have a base in Hong Kong. And certainly that's what we've seen is that Hong Kong's been driving a lot of that growth. So where's this all leading? I think dramatically here in the red you can see clearly what we're seeing is the rise of a new global currency. And half of China's total trade flows with emerging markets settled in RMB over the next couple of years. That will be more than $2 trillion. And you can see on the right there the sort of growth that would mean that would be the third most traded currency in the world in terms of daily turnover. So that's obviously a dramatic change to the world economy, and certainly we expect to turn that top 3 quite quickly. And with further reforms, we're seeing a lot of the governments come out and say they're going to hold RMB and swap arrangements, etc. Certainly we see full currency liberalisation being around the 2020 mark. So it's not that far off. We're already well through 2012. So we certainly see that gradual appreciation continuing and to fuel enthusiasm for further expansion. So China's enterprises all around the world. So I think you'll see, certainly that's a fairly simple mathematic sort of diagram there. But I hope that gives you a sense of where it's been and where we expect it to go. Now this is the slide that is a little bit noisy, there's a lot on this, but I think this is what we're trying to get through today, is really the more practical scenarios about what's needed to be done in RMB in terms of the left side is the payments into the mainland, and obviously the right side is the payments from the mainland. So, can everybody read that? Is that too hard to read? Do you want me to read out a few of those? Can't read? Shaking heads or nodding heads?
You can't read.
Okay. You can or can't?
Can't.
Okay. We rattle them off. So obviously in the mainland, trade payments for goods is certainly available. So, and now this is where we talked about mainland designated enterprises are allowed, and as soon as this blacklist disappears, we'll certainly see more, the non-MDE status. So that's certainly available now. Payments for services are allowed. Intercompany loans are allowed. You can see foreign direct investment, including capital infusion. I'm not sure if my accountants are talking a bit more about that today. We certainly have seen ability to invest. Now, expatriate salaries are not allowed at present, so that's probably one thing to keep an eye on there. On the right-hand side, which is the payments from the mainland, again, trade payments for goods that are available and for services, shareholder loans, case by case. Now, that's obviously subject to approval, and certainly having on-the-ground experience with advisors can help walk through that approval process, and we're certainly more happy to help coordinate that. We're seeing outward direct investment, or ODI there, is There's certainly capital investment overseas from China happening in RMB as well. Now that's subject to the local obviously approvals in China as well. And clearly dividend payments and repatriation of profits is allowed. So a lot of this is now functioning. So it's not just about trade, it's around a whole range of other areas. Now expatriate salaries are allowed obviously in terms of payments out of China. So hopefully that gives everyone a bit of a sense of why there's been so much growth, because there is actually quite a bit of payment functionality now allowed in RMB, and certainly from our experience we expect more deregulation over time. So for Australian companies though, clearly what we're seeing is importers and exporters more actively dealing in RMB, and it's a range of commodities, it's a range of, as I said, importers and exporters. But ultimately, the regulations are driven by the Chinese government at both the national and the provincial level. So yes, there are some tricks, but you just got to work them through. So to us, it's certainly based on those stats, I think it's quite compelling that there's a lot of functionality now in RMB. Now, I think that a lot of this was previously discussed, so I won't go into this in too much detail, but I hope this gives you a sense that there's a range of benefits in terms of potential savings. Clearly, at the moment, transparency in pricing is a major issue. If you're only dealing in US dollars, you really don't understand what price they're dealing in locally. We know a lot of Chinese companies also have to pay their staff in RMB. They've got a lot of local costs in RMB, so clearly their preference is to deal in RMB. And not have to deal. Most treasury dealers don't want you to know, but clearly there's a margin when you're obviously converting cross currencies, and to minimise that is obviously a saving. And certainly from our experience, it obviously depends on the negotiating position of the counterparties, depends on who's the gorilla and who's not. But certainly on switching payments to RMB, our general feedback both locally and offshore is that there's a 3 to 5 to 7% sort of margin improvement, so certainly consistent with what we said earlier. And certainly there's a natural hedge opportunity for many companies, because clearly most people, a lot of companies are dealing both importing and exporting with China, so it makes sense to have a natural hedge and take advantage of that and not lose some of your margin by crossing the currencies regularly. So obviously one of the surveys that we've conducted also shows very heavily that in-country Chinese corporates are wanting to deal in RMB, and certainly Australian companies aren't quite as ready yet, and that seems a major disconnect when we look at how important China trade flows are as a country. So certainly we would hate to think that Australian companies will miss out because of not being able to deal in RMB. If you've got an order from a number of different suppliers or customers, clearly the Chinese corporates will be able to make a decision on who they want to deal with. If they want to prefer to deal in RMB, then they'll take the transaction in RMB. So, and certainly there is an ongoing expectation for appreciation over the long term. So I suspect for an exporter, holding RMB could actually be a good thing, but it depends on obviously your assessment of where you think that will ultimately go. So I think that probably gives you an idea of some of the key issues. Obviously, I think that's fairly self-explanatory. We've gone through that fairly, and we can leave it to some Q&A. But I think the key takeaway we wanted people to think about is just as simple as it says on the table here. Transacting in RMB isn't as complicated as most people think. So really the first step is to just ask, can your bank support RMB or not? A lot of the Aussie banks can, to varying levels, and certainly we need to check with depending on which side you're on, whether you're importing and exporting, check with your buyer or supplier to ensure that they are eligible to remit or receive RMB. And certainly there have been complications in the past where maybe their bank wasn't fully RMB enabled, depending which bank they were dealing with. So certainly it's worth checking. But ultimately, it's as simple as providing account details and giving it a go. Do a trial payment for $100 or something. It's really not that hard to give it a go. So certainly don't put your whole house on it maybe in the first transaction, but there's ways of trialling it and making sure that you can trial RMB safely. And certainly it's compelling to us the momentum. And we're certainly happy to answer any questions you may have, and I've got a range of colleagues here if we don't have time for the panel time. Hopefully over the later you can